Mr. V.S. Mani, the Executive Director and Global Chief Financial Officer of Glenmark Pharma, now live right here on this edition of The Market. Good morning, Mr. Mani. Shall we begin with what the street is talking most about, the price erosion that we've seen when it comes to the U.S. markets, a high single-digit price erosion. You know, this has been talked about now for many weeks. It's been the larger trend as well, losing the pricing power in the U.S. What do you make of it, and going forward, any guidance?
So, obviously, for the last couple of years, there have been a price erosion, and companies have kind of made up with that with new product approvals. So, I think, this large single-digit erosion is there to stay. It will be there next year as well. But we will continue to do about 14 to 15 filings like we did every year. So that's how we'll try to take care of our. We are aspiring for a low single-digit growth. That's what we're guiding the street to. So I think we should be there. But as you would also know that our product, our new drug application for Altris was also approved by the US. So somewhere later in the second half, we should see those sales coming in. And obviously, we have a long-term strategy for respiratory, and that includes the US as well in terms of some of the work that we've been doing on the Flovent side. So I think those are things that we look a little more into the future. But currently, yes, there is a erosion in the price, and it's been there for some time.
Okay, so that's the guidance that's coming in. It has been the larger trend across pharmaceutical companies, and it's going to stay that way. Mr. Mani, there's of course a one-time COVID inventory provisioning. So if we were to remove that, can you give us an idea of where exactly margins for the company stand and how you expect them to perform just given supply chain constraints and of course the unprecedented inflation?
Sure. So, for the quarter, if you adjust for that one time, we are closer to 16.5%. Okay. But also the other thing that we have to take is historically our other expenses as a percentage to sales in Q4 is always much higher. It's about 31% vis-a-vis for the full year at about 26. So what I would like to guide is a full year is a better way of looking at the financials. So we had done about 19%. So I believe that going forward, we are again guided to almost a 19% because current year we had some COVID sales which would probably not be there next year. Just to put things in perspective, this year we had a number of objectives. One was to grow sales between 10 and 15%. We ended at about 12.5%. We guided the street again to saying that our margins would be sustainable 19%. For the full year, we ended up at 19%. We spoke of a debt reduction and we did about 1290, but adjusted for any currency that moved, it would have been 1370. And lastly, we said we would do one or two deals in Ichnos, which we actually did one deal with Almirall, where we received upfront of almost 24-25 million. So all in all, the way we would guide is that we are hopeful that next year also we'll sustain the same margins of 19% on a full year basis. Supply chain, obviously there continues to be challenges on the supply chain, on the procurement costs, etc. But taking all that, we would like to still guide that we are hopeful of reaching the same margins.
Interesting. Mr. Mani, tell me about whether or not you expect to restart the Monroe facility and then restart supplies to the US.
Yeah. As you are aware that obviously we are working with the FDA to kind of address the observation that are made. We also have started in earnest the remediation measures, and we are hoping that in the second half or closer to the later in the second half, we should be in a position to commercialize and restart the facility. As you know, the environment there to operate manufacturing facilities are extremely challenging, including some of our peers, but we are still very hopeful of remediating and starting commercial supplies later in the second half of this year.
Interesting. Tell me a little bit about the India branded business as well, Mr. Mani, and whether or not that's going to be the key growth driver for you going forward.
Sure. So just to say that our India business, if you were adjust for the COVID, would have been a double-digit growth. Even the IQVIA has given the non-COVID growth for us is about 15.5%, vis-a-vis market growing at about 10.6. For the full year, again, we grew at about, as per IQVIA, at about 23.6%, vis-a-vis the market growing at about 17.4. So in all, we've been among the fastest growing companies in the top 20, and that's due to a number of product introductions, etc. This year also we introduced about 31 products, and we will continue to work on those. So I think India will definitely play a large role in terms of the growth. And also, if I were to say, even in the last year, the US obviously was a challenging environment. We grew about 2% for the full year. But besides that, if you look at it, other than India, even Europe did about almost 14-15% growth. Even the rest of the world markets did about 28% growth. So I think there are some, the rest of the markets have done quite well, including.
You did flag off that you're going to maintain your growth going forward for FY23, and you're confident of seeing that guidance when it comes to your margins. Can you just walk us through what are going to be some of the key drivers for growth?
So next year, obviously, we have guided to a 6 to 8% growth in sales. I mean, obviously, adjusted for the COVID sales, it will be a double-digit growth. The drivers of the growth, obviously, one is a big driver could be the Ryaltris, which we have already got approved in. I mean, the NDA is approved in the US. Will start sometime supplies for partners. Also, it's been approved across all the EU geographies, and we already started selling it in UK, in basically Italy, and some of the Eastern European countries. So I think that would be a big driver, and obviously even India will continue to perform well. And so these are the reasons why we feel strongly that we should be able to meet our margins and targets.
Okay. And, there have been some licensing deals as well that the company has just closed. Can you walk us through what else is in the pipeline?
So the company actually, last year we said that we would do 1 or 2 licensing deals. We did a licensing deal in Q3 with Almiral on 880. So we are continued to have a number of our targets are there in terms of the oncology side in ICNOS. So we are hopeful when the data readouts come sometime later this year, there is a good possibility there could be a deal as we go along.
We appreciate your time. Thank you so much for walking us through the outlook. You sound very confident going forward on your margin levers, the growth, as well as licensing going forward. That's